Well, thank you, everybody. I am really happy to be here and part of this group. I'm here to talk about some high quality trading, and Adrian and I were actually joking. Are we going to call it trading high quality or high quality trading? So it can go either ways. Um, this is me. I'm Julie. This is my husband there too. Is Adrian Manz. We're actually a trading team, so it's just me today. But sometimes we're doing it together. We have traded since the start when it was all coming out. We were in graduate school, and they were offering trading online, and it was a really exciting time. So that was around 1997, 96, and 97. We started trading ourselves, and we have been teaching trading since 1999. Back then it was all about you'd go to conferences to meet with other people because the internet isn't like it is today, right? I mean, there was internet, but there were no smartphones, and it wasn't like communities of so much on the internet. So he would go and meet with people, and he had ideas about trades and how to get the opportunities in the market. And then other people would, and they'd say to him, what are you doing, what are you doing? So we started teaching around 1999, just sort of as an outgrowth of our own trading. And it's grown over the years. So obviously it's been over 20 years, and we have courses and services. And mostly what we're trying to do is teach people how to trade themselves, right? We're not trying to foster any kind of dependence. We really want people to go ahead and learn how to do this on their own. We have mastermind members who are part of a larger training program, and that is how we don't get lonely. It's so nice to have a community, and we really love our mastermind members. I'll show you them in a minute. These are some magazines that have featured articles that Adrian and I have written over the years. The bottom right is a book that he was invited to put a chapter in, and there's several more like that. These are the books that he wrote about our things. Again, when trading started, when people were asking, "What are you doing? What are you doing?" He thought, "Okay, we're both PhDs and are both trained to research the heck out of things and then compile that information and put it back out there. Put it together in a new way, in a different way, and put it back out there." So he thought, "Oh, this will answer the questions. Here's what I do. These are the patterns I look for, and this is what I'm looking at." And then the other ones are translated into other countries. When people were looking for great content on trading intraday, they came to him and said, "Can we publish you in England and one in Italy there?" So that's uh, that's been going back. Around the horn on the upper left is really what I'm going to talk about today, and the patterns in that. And I'm going to take you through a day in the life, uh, and that's going to be republished sometime spring or summer. Adrian always says spring, and I always say, let's say summer, so it's not so much pressure while we're doing all these other things. So this is just to give you an idea. These are from our boot camps twice a year for the last almost decade, 9 years, I think. We've had these boot camps in spring and in fall. And of course, last year has been a little disappointing in that way. And we all cannot wait to get back to it. Most of these are in Miami Beach because it's the right time frame and it's such a nice place to be. One is in Chicago, another one's out here in Santa Monica. We've had a couple in California. That's where we are. We're out in California. Um, and these are the people that, like I say, keep us from being lonely. These are our mastermind students. They're learning how all Adrian is selecting his trades and learning to do that themselves. Since we are professors by trade, we've both been professors and have, like I say, doctorates in this thing. We understand that adults learn differently than young people, students, and we've set the program up to do that. So, we all as grown-ups want relevant material, want to be involved, receive feedback, see the real world benefits, right? See how it's really going to affect me and have the time to practice the material and do it on my own time should also be on there. I like this quote I just found. It's attributed to Benjamin Franklin, but whoever whoever said it, I think it's pretty true. Tell me and I forget, teach me and I remember, involve me and I learn. So this program has always been about involving people, not just at these boot camps, but it's a year-long program where they come into a training room in the morning for the first hour, and we're trading there, trading our plans, and then they are invited as an educational tool to also trade those plans, and then also, of course, come up with theirs based on those plans. So the plans I'm just going on about, there are four. These built up over the 20 years we've been trading. They all capture some different part of the market. I'm going to talk about the bottom left, the around the horn plan, which is more like an intraday swing trade. Now, if you haven't traded intraday, I'm going to talk about that in a minute. A lot of people like to add it to whatever else it is they're doing because it is another revenue stream that is separate from it's like diversifying, right? So all of these have a slightly different bent. There's the NASDAQ scalper. I'm going to show you one of those. A gap fade strategy that's just the first half hour of the morning. This fastball XRV, we're not going to go into today. That's a little bit more advanced and a little more limited, and it's based on one of the patterns I'm going to talk about. And then the one we're going to talk about today. I do have a couple assumptions I wanted to go through. And essentially, you just can't be new to trade our things. So it's okay if you haven't traded intraday before, but I just like to tell people that, you have to start somewhere and you have to learn as much as you can. And to trade these things, you have to at least know that, what a stock is and why you would trade a stock and just some basic financial information. We have a lot of folks that come from investing or swing trading, so they have a good idea of how that all operates. It helps if you have traded or invested before and understand a little bit about brokers. I'm going to talk about that a little bit later under, your tactics and what we need to know. And then, of course, it's online trading. So computer is really central to trading the way we're trading. And of course, intraday, you have to want to trade intraday. Now, intraday doesn't mean you have to trade every day. We have a couple strategies that work. You can trade on the days that you have available, and that's been really great for some of our clients, especially on East Coast time, like you guys are. So, or some of you are, because maybe you can't be there at 9:30 to do these opening trades, but you can be there sometime during the day to trade some of these NASDAQs. Maybe at lunchtime, you could trade Tesla, something like that. So I'll tell you a little bit about that. But we have a little bit of something for the ways the market's going to present itself so that we can see opportunity almost, I mean, each and every day. I mean, there's some opportunity on one of these things every day. Um, so anyway, so why listed? So we trade listed, US listed stocks. I know some people like to tout the unlisted stocks, and I just wanted to give a shout out to why we trade listed stocks. And these are not my opinions. The first three are from FINRA. FINRA is uh, it's the governing board that regulates the unlisted stocks, but they are not actually a government agency. It is a self-governed thing on the unlisted stocks. So we trade them because a listed stock has to file disclosure rules and file regular financial statements to the SEC, which is a government body. And those filed with the SEC can tell you something about the company's performance and financial health. So we only are interested in trading the highest quality of companies. That just lets us sleep at night. That's just how we do it. So Investopedia there is saying unlisted securities may be of lower quality. And we're in for a short amount of time, but we are also in we want more predictable moves. I am not one that wants to feel like this when I'm trading intraday, and I don't want the bottom to drop out beneath me. And then just a little pro and con of unlisted stocks from Investopedia. The pros being they're not available otherwise, and they list fewer regulations as a pro. I don't see that. I'm sure there are advantages to that for some companies that can't meet the listing rules and capitalization and all that. And there can be significant returns on those if you are on the right side of uh, of a whole lot of volatility. Cons, of course, there can be less liquidity and less public information and some volatile moves. So I just want to put that out there because there's been some confusion, and we've talked to people before, and they ask us what it is we're trading and why are we only trading the listed stocks, and this is why. A little bit more security, a little bit knowing that the moves in those are going to be the moves that we are looking to anticipate. Okay, how you trade high quality trading intraday could be high quality trading high quality intraday. There's 3 steps here. So we're going to go over strategies, tactics, and discipline. 3 things. If you've never traded intraday before, these are the 3 things you need to look for in any plan that you're going to do, in any market you're going to do. Strategy meaning you have an overall plan of attack, let's say. on how you are going to go into the markets and get money back out of the markets. Tactics, the difference between those, one is that your strategy, how are you going to do it overall? Tactics are what are the weapons, if you will, that you're going to use to get in and do it. What are the steps? What are the approaches? And then discipline, you just need to have in general. And we'll talk a little bit about that if we have time. So I wanted to start off going over strategy. And as I said, when we started, we were in graduate school. We went to Claremont Graduate University, now was Claremont Graduate School at the time. And Adrian has an MBA from the Drucker School there. And he was fortunate enough to be in classes with Peter Drucker. He actually would drive Mr. Drucker home because he lived in Claremont at the time, and with his wife, and Adrian speaks German and they speak German, and so they'd have coffee and cake, and his wife didn't really want him driving at that point. So anyway, a lot of the things that he say are near and dear and very central to the way we trade and the way Adrian has conceptualized our strategies going forward. So this quote I liked, entrepreneur, which we're all entrepreneurs. If you're in the market, this is your entrepreneurial endeavor, just so you know. I have in another presentation, a name tag that says, hello, I'm an entrepreneur. If you're trading, no matter what, futures or whatever you're doing, you're an entrepreneur when you get in there. So anyway, always searches for change, responds to it, and exploits it as an opportunity. So this, at the very formative level, is what Adrian was looking at when we went in. He was looking for the changes and to exploit it as an opportunity. We're not looking to actually be smarter than the market. We're looking to go along with the opportunities that it gives us and to exploit the changes as these opportunities. So he saw the cyclicality of markets as one of those things. So what happens is you have different phases of the market. You have the accumulation phase where markets sort of going sideways, and then you have the markup phase where stocks are growing. And again, you enter another accumulation in this point distribution after it's climbed higher. And then we're going to go down and there's going to be markdowns. So there were markups, now there's markdowns. And then you enter into another accumulation phase. And Adrian took a look at this and said, okay, how are we going to capitalize on this constant cyclicality in the markets? Even though when we started, it was a lot of momentum. And there were a lot of hunters, if you will, out there, hunters versus trappers. A lot of people, you could almost just, reach in and grab some shares of eBay and ride them, like a rocket for the day, get out at the end of the day and be like, wow, that was great. Of course, that came to an end. So we needed to know, okay, how are we going to go forward in all of this as time goes on? So this is what Adrian came up with. I learned over the years how to manage these trades, and now I see them too. But every day since about 2004, he has published these trades, and these are trades that are more intraday swings. They represent everything that we suggest you have in a plan, no matter what market you're in, no matter what style you're doing. These are the strategies you need to have if you're going to be successful in the markets. So plan the trade, trade the plan. That's been our motto for all these years. Strategy, discipline, results was our latest one, but there's a mug with plan the trade, trade the plan in his mom's house in Ohio. So we could show that to you. I actually should take a picture next time we get there. Anyway, these are what the plans look like. That sheet there is what I call the cheat sheet, and there's plans that go through every single aspect of the trade, and those are clear criteria. So every trade you plan, and we're trappers, right? We're planning the trade the night before. Every night before, Adrian goes through the market, about 1,500 stocks by hand, and picks out 7 patterns. Well, 8 actually with Sinker. So, but every one of them needs to have a clear criteria with a precise trigger. You have to know what your trigger is and why you'll enter, right? That's your trigger. Exit, both for profit or loss. You need those the night before. You need to know that before you get into the trade, in any case, even if it's the day of. And you need to know what that reward to risk ratio is. So, and you need a winning ratio. So one of our strategies, they are more winners than losers, but the losers will be higher. That's the one we're not talking about today, this fastball XRV. But overall winning ratio of the strategy is in the right direction. So please, if you have any kind of trading plan you're looking at, this is what I need you to really consider having in that plan. not just get in and get out when it feels good. That's rarely a good longevity solution. Okay, our plans also have rules. I'm not asking we look at all these rules. Those come at the end of every trading plan every night. And they're pretty simple. It's just these 2 pages. It's really only one page if I just did the rule part. And essentially for the trade I'm going to show you, it has an entry and it has a profit target. And when it gets 50% to the profit target, you pull your stop up to break even. So then it's a risk-free trade. So that's kind of fun. It keeps it moving along, and you also have a clear stop, so you don't have to worry about it. We've also kept records over the years. This is every single trade back to 2006. You can see as you look, if you were on the service or would like to see the service, you're going to have an opportunity if you want to come in and see this particular trading plan, see what is going on here. But if you click on that red button, you would get in and you'd see the trading plan I'm about to show you. But on that member page, there's so much information. In the middle column, there's all kinds of videos to show you, how to do it and what to do. And on the right there, where it says, where it has the spreadsheets, the results spreadsheet, you see those go all the way back? That's an Excel spreadsheet. I'll show you in a sec. That is every month. And then it also has a tab for every quarter and then a tab for annual. So you can go through every single trade that was presented the night before and see what happened the next day, win, lose, draw, whatever. And then if you keep going down on that page, it's this second column, which is, there's an archive, and you can see that's 2021 there. You could go to any one of those in the archive, pull that up. And then what's cool about that is you can trade it forward. You could take your trading software, go back to the day that you were supposed to trade that for the planned trade, and go ahead and see how it played out yourself. We have a trading simulator I'm going to show you that I really like too. So it's a very robust plan. It's why I'm sharing it with you. There's like really exciting trades I'm going to show you as part of what happened this day that people are drawn to, but I wanted to bring the focus back to this because this is the thing that it has shown longevity over all this time using these market cyclicalities, and that's the tactic. I mean, that's the strategy, right? The tactics are going to be these patterns I'm going to tell you about, and I'm getting there, I promise. Okay, so here is just a sample of, this was 2020. This is the kind of specificity we're telling you you're going to want to keep. You're going to want to keep logs of your trades. Otherwise, how do you know if they work? So these, every day we say, he had it planned out what we were looking for in terms of a profit, where the entry was. Okay, did it happen? Also, what was the stop? And then were they a long, a short? So he has this all planned out. You can come back and look at this later and see what, or just go ahead and take our trial. You can nose around in there and spend all the time you'd like, and then actually go see the trades themselves. It's super, super deep and super complete. Okay, I just this morning took a picture out of the first edition of Around the Horn, and it doesn't have Syncer on there. But anyway, chapters 4 through 10 there should be an 11 on Syncer. The other editions do. These are the patterns. He named them after a baseball analogy, but it helps you see. So the fastball is really an expansion of range and volume, and it sort of goes on like that. But it helps to identify which of these tactics we're going to use to work on getting money out of the market that day, the next day actually. And if you want to see those, I'm just going to do this now in case anyone has to run. So you can text trial to this, and what you'll get is 2 weeks access to just look at those. Like I'm not selling anything right this minute because I need people to know if they want to join us, they can join us. And we love our people, and I'd love people to join us. But if it's not for them, that's not anything we're trying to convince people to do anything. But anyway, I'm just going to show you that real quick. So you just text trial to that number, and you can come in and look at those that I just showed you more in depth. Okay, what do you get when you click on that, the plan? This is the cheat sheet. This is my favorite piece, the cheat sheet. I used to do these by hand. And then, I don't know, it was years into it, Adrian said, "Oh, you want me just to have Excel do that?" Yes, I do. So, although you kind of lose something in not writing it down yourself too, right? But it makes it immensely easier. And then, of course, anyone getting it gets this too. So it's a cheat sheet of what we're looking at during the day. What you see on here is which stops we're looking at that he found the night before, what their pattern is. These ones tend to be infield, fly, and fastball, but oftentimes you saw there's other patterns that will present. And then there's a second section called stocks to watch, and I'm going to get to that in a minute. Okay, so let's go by this. This is a day in the life, right? I keep telling them in our room, which is just at the first hour of the day, that this is opportunity central. I mean, you're not going to get every opportunity, right? So this is actually my sheet from that day. And this is what I do to those cheat sheets. I print them out and then I murder rate them. So those are the notes I'm taking during the day. So we're going to go through this and I'm going to show you what's happened there. And the first one we're going to go through is that upper portion of the plan there called Around the Horn. And there's DAO, NDP, and PAC that were on the plan. The other one, ED, is, see how I have that circled in pink and wrote XI next to it? That's extra inning. So I'll get to that in a minute. But what happened to these stocks and what would we do with them if we got them? All right, let's take a look. So how you would get there, and I put this here because a lot of times people are very confused. It's a website. So if you text trial, what you're going to get is a text saying your plans are ready. And this time around, I think we're going to give you 3 stocks, but you're not going to know every night in the text, but you're not going to know what to do with them unless you go and log in. And it's so easy. You go to TradeOutLoud.com, you sign in, you can see my login there. If you scroll below, even if you don't sign in, if you're not a member or trying anything, there's a bunch of free videos and articles and things on the site. So it's really, the site is really old, probably one of the oldest ones there is out there, and it is deep, deep, deep with info. So anyway, you sign in, you put in your email, that's mine. Feel free to email me if anyone has questions, Julie@TraderInsight.com. I'm happy to answer questions or talk to you. And then what comes up is your dashboard. So you can see the first button, these are all buttons. The button there is the war room to get in just for the first hour. Do not come, if you are actually going to join us and see what we're doing in the morning, do not come later than that because we're not there. So people like, oh, I came and there was no, we won't be there. We're not joking. It's a little bit before and a little bit after the first hour. But below there's the Around the Horn. So that's where you'll get it. So if you decide to do this, then you're going to log into the site and then you'll get an explanation of what we're looking at for the next day. Okay, so here was the first one. And it's a short, it's DAO. You can see on the left there, that was the trading plan. On the right, that doesn't come to you. That's what happened the next day. So I highlighted above in sort of that beigey color that's the date that we're looking at, Tuesday the 26th. There you are, Tuesday the 26th. The chart that's on the plan is a daily chart, and it's showing you why that's a fastball. So that's what everyone's learning to identify so that they can set this up themselves on a daily. What you're looking at on the right is a 5-minute chart. We trade from 5-minute charts. And you can see DAO on the left. It shows you it's a short. And you can see underneath that where it says position, it's going to tell you what the entry is, what the stop is, and the stop means stop loss there, your initial target, what the ratio is. So we make sure that's in the right position, in your favor. And then 50% to target so that we can move our stop up to break even if we need to. So let's see, there's other information on here. There are different confluence areas. Sometimes we do something called a pivot trade. We can make more hay out of these in a couple different ways. I'm not going to confuse you with it now. Adrian also puts the floor trader pivots on there. Those are the colored lines you see, and they correspond to those colors there on the plan. We don't create those. Those are created by your software and are a standard formula that we don't need to go into now. But you can see the other information there is just what the stock's name is, that it's an infield fly. That's the pattern. We know that's a reversal pattern. And then what sector, in case you want to go and see, is the whole sector doing the same thing. Okay, so what happened? I tried to color code my little arrows here based on how the cheat sheet is. So this was a short. That red line up there is what the stop loss would be. It opened above the stop loss, came down, passed through where the stop loss was. You're not in yet because your trigger is that green arrow. You're triggered in on the green arrow. It bleeds black a little, but it doesn't stop you out. Goes down to your 50% to target. That gets you then pulls your stop to break even. And at this particular one it's a 5-minute chart. If we went to a 1-minute chart, you'd see that it didn't trigger you out at break even by the time it made 50%. And then went down, barely touched the profit target is the blue arrow, and that's also on the green pivot. And if you go back to the left, you see 3405 is the green pivot, and it barely went down to 02, and you're out at or around that profit target, right? Okay, so that was the first one on the plan. What happened with the next one? Okay, so MDP, this is a long. I have that highlighted in beige. Again, that's on the 26th. Your stop loss, this is a long, so your stop loss is where that red line is. And of course, the dotted lines are what I put in. Those are the stop losses. So that number there corresponds to the number over on the left. And you're in. You ride that up to 50%. Oh, your target is the green arrow. You ride that up to 50%. You ride that up to the profit target. Take your profit target. Look what it does. Tumbles all the way down below your trigger And now you're able to get in again. So you either got in on that second green arrow, if you will, from left to right, um, and then wrote it down toward the stop loss, but it didn't stop you out. You see that. Or if you didn't make it in on that one, you weren't filled, or you didn't see it, or you weren't set up to automate, and you made it in on the second one, either way, same result. You're in, it's two entries, the first green arrow and either the second or third. You're either already in or you're entering on that third one. And then same deal, you write it up and you take your profit end of day. So that one went 2 times a day. We take 2 entries. So that was fantastic. Now we have another reversal, infield fly. Again, the red up here is your stop loss. The green is your entry. So if it triggered you in on that first green arrow, then you're still in, but you didn't get stopped out. If you weren't triggered in on that little bit there, you had plenty of time to do it on that second green arrow. So this is one entry, either on that first arrow or the second. And then it does nothing most of the day. This is a trade you have to have. It really is well suited for a baseball analogy. And you're wearing your baseball hat with this one. You're letting it ride out. You're eating some peanuts and you're enjoying the afternoon. Most likely what you're doing is you have this on automation, because that's a beauty of almost every software package out there. You can just automate this and walk away and just be sure you can, glance at it from time to time, make sure nothing crazy's happened. But anyway, went to 50%, went down to the profit target end of day. Beautiful. All right, that was the top portion of the plan, except for ED. So what happened with ED? Well, nothing happened with ED that day. So it was on the regular trading plan. Let me go over here and show you. This is, so the 26th, it was a long, so on the trading screen there, the 5-minute chart, where it's beige down at the entry price, you see it never triggered in that day. The next day, so I look at these trades that don't trigger but still have a good setup. I mean, you don't need to throw the baby out with the bathwater, or however you want to say that. So the next day I look to see, is it a possibility that it's going to trigger the next time? And indeed it did. So on the next day, the 27th, you can see up in beige, I have that highlighted. It triggered in, went to your 50% to target, went up to your profit target. If you were on the ball or you re-upped it and automated for a second entry, it did a second entry again. It went below your entry price. That's how we like to do it. It needs to go beyond the entry and then come back at the entry if you're going to get in again at a second time, and went back up for a second entry. So ED was great. It was just the next day, but you don't need to throw away all this hard work that you're learning how to do, that you found this trade. And if it still looks good, you can hold it over to the next day if it hasn't done anything wrong. So that's the top portion. Second portion here is stocks to watch. These have similar rules to the top part. These ones are not in those results, and you have a little more discretion with these. So you can see I highlighted Hormel, HRL, and NYT are 2 of the 3 that went. The other one did not trigger, and you can see I have a little X with a circle. That's my notation on didn't trigger. It did. I'm not showing you the next day. It did go short. You see there, Adrian has it to go short. It did, but it gapped more than 20 cents, it gapped lower. So it did what he thought it was going to do. He did the next day, but it wasn't something we could grab, which is okay. That's going to happen. What you want to see in any plan you're putting together is that there's plenty of opportunity out there. And that's what I love about these plans, is there's tons of opportunity. Okay, so let's look at Hormel. So this is stocks to watch. Here is our trading day. I don't know why I have so many. Anyway, so many days before, but here we are. It's a long, and you can see where the stop is down there. By the time it triggers, it never comes back down to our stop price. Goes to 50% is the yellow line, and then the first blue line is the first target. Now, I don't know if you saw on my sheet, and we'll see that again. I'll show you where I wrote in pencil that I, at that point, trailed this one. So we don't do that on the regular trading plan. This one, I saw the price action. I've traded long enough, I think 20 years, to almost 25, to be able to do a little tape reading and see that there's still a lot of buying going on. So I decided to trail it with a 10-set stop. Our software allows for that, so I don't have to be glued to it, which is delightful. And it went, I think it's another 70 cents or something. And I got out up that next pivot. A lot of times we use those pivots. You see those down there on the left, again, on the trading plan. Those are generated on our screen by our software, which is Realtick in our case. And I got some extra profits out of that. That's always a good day, right? The other one, NYT, this one, I'm not going to say for sure that it was gettable. I did not have this programmed up with a bracket order, so I did not get this one. I did talk to some of our people who did get it, because there is a way to set these trades up with a certain kind of order, a bracket order, where it automatically releases and can get you into these trades. You can see there was an awful lot going on, and I did not have this set up with a bracket to get it, but it did go. I mean, first right off the bell, it hit your entry or our entry, and then went profit target and well beyond. So I like to show that. We also are very transparent, super transparent, and like to tell people you're not going to get all this, right? I told you that. But it's okay. I got an extra 70 cents on my last one, right? Okay, here we are. I highlighted in pink on this slide, this next thing I'm going to do. It's not, there is a sheet that you'll see, a scanner. Actually, this is called our Baltimore chop. This is a strategy. It is a first hour strategy. It is a gap fade that relies on certain statistic. It's not any old gap fade. It has certain criteria. And we have a scanner that identifies that. So these were the two. Anytime you see a smiley face, I'm a happy girl, right? If this is, like I say, mine's in my personal sheet. So this is where I know when I look back on, these were good trades. So RTX and GE were the two of them. You can see I also, though, in pencil there, before I move on, I said small range right there on GE, right? So there wasn't, one of the things on this trade you do is identify what your profit and loss would be, right? Like you do on all of them. So this is what the scanner looks like. Adrian, in real time, highlighted those two, are the two that he was going to look at. And this is the scanner. Down here on the side, you see the eligible gap trades for the morning based on earnings and some other criteria. You can look at one of Adrian's presentations on our homepage, and he goes in depth into what this trade is. So I'm not going to do that here with our limited time, but I will tell you that here's those two charts. This is the one that's only the first half hour of the day, so we're not super interested in the rest of the day, so I can overlap them like that. You can see, let's go on. GE was the one that you see how it opened at 12.17, and the profit target is down at the opening, right? That's the fade is not for it to fade entirely. We have criteria on what we're looking for, and we're not looking for it to completely close the gap. So that's really, what do we have? 17, I mean, it's really 20 cents. So a lot of times we're not interested in that. We do have folks that trade this with us and independently that like these lower dollar gaps, because they can go what we call go heavy on them, and put a lot of shares behind them, and then maximize their profits on these smaller dollar stocks. So we do have folks who do that. And the other one over here is RTX. So this is a classic 1, 2, 3 pattern. If, like I say, you go watch one of Adrian's presentations on the Baltimore chop, you can see that this is the safest one and the easiest one. The other one's sort of an advanced entry when it can't push up higher. There's other criteria for that, and it's low dollar. So I can tell you, we personally didn't trade that day either. This is, like I said, just again, it's opportunity. I do know people did, from our chat room, that they did trade GE that day. This one, it pulls up and away. It's gapped up, pulls up. We're looking to get in under the lowest bar. In this case, this is a short. So you can see this, I drew this line. This line is where the entry would be. There's two possible targets. The first one is at the open. I'm using the other thing I should tell you, I'm using candles here in the room, and Adrian doesn't use candles, he uses bar charts. I'm using this because I find it easier for you guys to see and for me to see where the opening closes. But that just could be because if you saw me, I'm wearing readers. So this point, although I always saw it better in candles, I don't trade candles like candles. I just use it for the visual ease, I guess. Anyway, so you don't need to use candles. But this is the open, the first target, that first purple line, and then the lower purple line. The last one is the lowest price, right? That can be the second target. So either one of those are great. We don't try and beat ourselves up with, green money is good money. We aren't trying to take trades off early. We are trying to let them develop to certain places that we have identified. But at the same time, you can't bog yourself down with regret, because as you can see, there's just so much going on. You just got to move on and get to the next trade. So those were two great Baltimore chop trade. And there's some folks in our place that just, in our room, in our mastermind students that specialize in that. They really like that, and they'll add on the other trades also, but they have an hour or half hour at the opening of the market. And when these present, they can be really great. They're greatest around earnings. So again, you don't have to do them every day. If you have time around earnings where you can close your office door if you're at a job, or if you're home, just go hide hide in the closet. Or we had one trader years ago who went on vacation to Hawaii, and Adrian said to him, "Why are you trading in Hawaii? It's like 3:30 in the morning at market open." He's like, "I don't know, but I'm in the closet, so no one will hear me." His wife and kids, so he wouldn't wake him up. That's hilarious. Anyway, let's move on here. This is the other plan you usually get with Around the Horn, and we'll give you access to this. So this is the third thing that I have on that sheet written down with smiley faces. So these are the NASDAQ scalpers. These are volatility band trades. And again, you can go look at some of Adrian's presentations on that and see a little bit more on how that works. But what he has planned, again, from the night before is generally for three NASDAQ stocks. And in this case, it's BABA, NVIDIA, and Tesla. He'll plan these volatility bands. And Apple, he always has. This is the second page, because Apple, it's been an Apple a day for a while. Even with the split, it quieted down a little bit, but it's getting back to a really nice trading opportunity. I highlighted here on the Apple the two numbers that I'm going to show you when I show you these charts. BABA did not do these bands, so I don't have that highlighted there, but it did make people were trading in BABA, and I'm going to show you what they did that day. These two, NVIDIA and Tesla, did, and you can see they're in opposite directions. One's short and one's long. So let me take you over here. So first up, so Apple, so those two levels that I highlighted on the sheet that comes every night, from before, those are the two levels that were on there. I actually had snapped a line before I put the yellow on there. And that was what I saw for pre-market. So it's easier to see in BABA. This beige highlighting that box is pre-market. You can go down to the bottom and see that that's 4 a.m. This is all market time. So that's all pre-market. And in these big NASDAQ stocks, that can be a really helpful thing when they trade with more liquidity than a lot of the New York Stock Exchange stocks do, and get a little indication of what they might want to do. So you can see pre-market, that high was what Adrian the night before had said was an inflection for Apple. So it opened, went higher, and then some of our folks took it on the way down. And there's a level in between here that you could take a profit at if it had stopped. And then this was another level from that sheet that you already have sitting on your desk from the night before. BABA, let's see what I did here for you guys. So BABA, this is, like I say, the beige is pre-market. You can see I put a beige and also snapped a line at the top of the pre-market. And then that the blue arrow is where some of the folks, it again did the same thing as Apple, traded higher, started coming back down. And our folks who are really, good at BABA and trained on this, and this is a highly skilled trade, wrote it down to these pre-market levels. Again, that next line I snapped, that next beige line, was a pre-market level. And then some went lower, and then you wait for it to put in another level, bring it back up, and played those during the day. The other two, these were the bands. So these lines that I snapped on here, these dotted lines, those were the bands that were from the plan. And I just put this little arrow up and down so I knew what I was looking at. So yeah, Tesla was a long, and Tesla can be pretty slippery. We always say if, slippery has a wide range, right? So it's kind of it does a lot of several dollars worth of movement. So if that's something that's worrisome, a lot of times what a lot of folks will do is or what we recommend too is just cutting your shares lower till you're comfortable and confident with a trade. And if it still is too anxiety provoking, you just don't trade that stock, right? Tesla's way up at 800-900. Apple's now back down into the hundreds. So it's, you just pick what works for you, and then you can always, sort of aspire to the next thing if it's attractive to you. But with that disclaimer, Tesla did all its bands and moved up through for, actually did the first three bands. So let's, if you got in on the first band to the second band to the third band, these bands work. You don't necessarily stay in. You could get out, get back in, get out, get back in. It never made it to the fourth band. And so it didn't. That's okay. It made three bands, and you're probably pretty happy about it. NVIDIA, again, these are the bands, the lines that are snapped. It did do all these bands. The circles, it was a short. The circles are entry points, and the lines are where you would probably get out, and then you wait for it to go again to the next band. Maybe that first drop you would have gotten the next band. I don't know. And this is really where this is the most discretionary trade. And there's a lot of training on that too. So let's see. Is that enough? Are you exhausted? It's a big day. And again, not everybody is doing all of these things every day. And there are at least three different styles of trading going on there in three different time periods. But the important thing is whatever plan you have, whatever plan you use, make sure there's a lot of opportunity. Um, or compile several different plans or strategies so that you have opportunity in the market and as much opportunity as you can use, because you can diversify in that way. So again, if you're interested in seeing how this works live, sort of forward testing, we don't love back testing, and even our results are not back tested, right? They're all forward tested. They're all what happened, is given the night before and then what happened the next day. You're going to text trial to that number, 310-299-9148. And you can always email me at Julie at Trader Insight if that's something that you slipped by you, or you said, you just email me and tell me you want to check it out, or if you have questions. Okay, so that's the first little bubble, right? Is strategy, and that was a whole lot of strategy. And I just thought, hopefully, this will be interesting enough to see what actually happened in a trading plan that came out the night before, and then what was going on with it that next trading day. So, okay, tactics. Let's go on to that. So, how are you going to achieve this grand strategy of capitalizing on market cyclicality? So, here's two little quotes. I'm kind of big on the quotes right now. So, hopefully, you'll come on that journey with me. So, you've all heard this one, right? Give a man a fish, teaching him fish, feed him for a lifetime. It's attributed to a Chinese proverb, a couple different people it's attributed to. If you happen to look up those quotes, there's some very funny ones about that, capitalism, and anyway, there's some very funny quotes around this whole idea. But this is the idea that we really bring to our students. It's, I want to give you all this knowledge so you can do this yourselves. And a lot of people who have come to us and found a home with us are that way. They're like, look, I don't want to just get some random email, the night before, and then at some point that could stop, right? For good or bad reasons, I suppose. Hit by lightning, or I'm always thinking Adrian's gonna get sucked back out into the hedge fund world, and at that point, opportunity is to just have him analyze your stocks is over with. So you really need to know how to do this yourself. The other thing is, I'm doing a big course right now on psychology and performance trading. And one of the things that struck me the most in learning and taking different sources from that was this idea that in performance, whether it's tennis or golf, or let's say scuba diving, you get a coach, you get a trainer, you get someone who knows what they're doing to tell you how to do it. You don't just start from scratch, or you don't try and do it yourself. We use the University of YouTube for many things, but not for big, expensive, or risky things, right? I'm not going to YouTube to find out how to scuba dive. And it might be helpful, let's say, just for tennis or something, but you're still not going to get, what this one expert was saying is why no elite athlete these days starts from zero. You start with what everyone knows and you go forward. You don't try and reinvent the wheel. So I encourage you, get a coach, because especially in the case of, let's say, scuba diving, it's actually dangerous to do it yourself, right? And I almost put the stock market in that same place. It's pretty dangerous if you just want to make it up yourself. What you really want is to lean on experts who have done it for a long time, who have survived over a long period of time. And in addition to learning for yourself and reading about it and understanding it, I think you really need to lean on expertise if you want to have great performance. So tactics, obviously, we have many. I mean, we have giant courses, we have psychological evaluations, we have some beginner courses, and all of them have a lot of modules, a lot of learning, a lot of access. Again, adult learners need a lot of access to real time and practice on their own time, but then also, access to the experts. So we do it in that way for those reasons. And I highly recommend, no matter where you go, that you lean on someone who's willing to pick up the phone and talk to you also. I came up with this acronym for all the things you need to know in trading, because in talking with our mastermind buddies and with new students, they were trying to figure out where they were having hangups in the trading. And so I separated into 4 areas that are all overlapping a little bit, but that at least you can focus on these different areas and figure out, is there something in each one of these that makes sense? for where maybe the challenges were originating from. So I call those tips for success. It's technology, information, psychology, and strategy. So we're heavy on strategy, obviously. Everyone is. That's what they want to learn about, and we just talked about it. Psychology, I'm doing a course on because I think there's just no other way to get to it, and it's going to be super fun with a lot of inventories and assessments and things you figure out for yourself. And we're leading on this great coaching program, so you can sort of self-guide yourself through this thing. Um, and there's a whole bunch of things that go along with that that are cutting edge and exciting. First two, I'm going to go through real quick: technology and information, because sometimes people will tell me they're having trouble with their trading, and we really get down to it, and it's really more like fumbly fingers, or I don't understand my mouse. It's not that simple, obviously. So let's just go through a couple things in technology. Obviously, you're going to have hardware and software. I'm not recommending any one of these computers, and I think this is even a year old, this slide. Um, but you need a computer because this is online trading, right? So our recommendation is you get something that has that's a gaming computer that can handle all those graphics. So that's the name of the game, because you're going to see a lot of charts. So anything that can handle a lot of graphics, whether you're going to use a laptop or a desktop, a tower. We have Alienware towers. In fact, I'm going to show you this. I came across this the other day and I posted it, but this is our office 10 years ago or more. I don't know. I'm looking at it. It must be more. Um, we have different chairs. We have Ames chairs now, and down under the desk that Adrian sits over there in the corner seat, there is an Alienware there, but we have two new Alienwares there. That's an XPS I don't use anymore. And then we have bigger screens, and obviously not that television. Um, but we also are using, we used to use that red, I'll call it a laptop. They were really heavy and big, but they were great. They were the Alienware desktop replacements, they called them. And that was Adrian's. But now we have Surface Surface books that we use, and then we use these Asus extra screens. But in any case, make sure your hardware matches what it is you're going to do. We constantly, the reason we don't have these anymore is because you have to upgrade your hardware. Now, Adrian is a big fan of buying the very best of that, the very most, let's say, GPU. So we do get about 5 years out of our computers because he's bought the most technology. If you buy the least technology, it's going to go out, sooner than that. Software, really quick. I just want to talk about, it's kind of confusing. There's brokers that have their own software, and then there's software, and then you can pick different brokers. So in the first camp, where the broker has its own software, are things like TradeStation, Interactive Brokers, Thinkorswim, E-Trade, Fidelity, Charles Schwab. They have, they're already brokers, and now they have a software that goes with it, and there's no choice. You use them as a broker. And then there's other ones that are independent, where you can use the software and take it to different brokers. So we use, under independent, we use Lightspeed and Ez. That's just what we do. But there's other things. There's Cobra. There's in terms of brokers, and then we say Sterling in terms of software. So you can mix it up like that. Info. We are talking about market-specific info. So, cable news or even just general nightly news, that's not something that's old news, right? First of all, a lot of that's opinion. And y'all only get 1 hour a day of that. Stop it. Stop it. You get 1 hour of cable news a day. That's it. But anyway, don't use that for trading, because that's going to be old news. Find market-specific news. Now, I do have on the right there, as just sort of a cheat, I pull up CNBC in the morning, and it shows pre-market data. So I can just see where the futures are and what's going on. Adrian does other things on his phone to look at that. I know Bloomberg also has that. Probably Fox Business has that. Whatever you want to pull up and just get a good snapshot of where the market is right at that moment. And then on the left, we have one of our favorite, which is the fly on the wall. Love them. And that is up to the minute market news. But there's other ones, I think Benzinga and things like that. So when you're going to get news and you're trading intraday, make sure that your information is top notch. And then, of course, always read everything you can. We read Financial Times out of London and Wall Street Journal and all those things too, to get a grip on what's going on. Okay, and then finally, the Trading Sim is this amazing trading simulator. That's our reference code down there. I encourage you to use it if you're going to go and do a free trial, not because we get anything out of it other than enough. It's coded so it goes back to us, so that they have actually changed things on this simulator so that our customers see what they want. So like we do a lot of different order entries. And so they actually have upgraded or changed up so that reflects more the order entries we're teaching people how to do. Like I mentioned, bracket orders, and there's conditional orders, and there's stop market, and stop limit and all these things. But if you're looking for a good trading simulator, I can't recommend that highly enough. It's fantastic. Um, and we use that too. So on, let's say, the NASDAQ trade, trading Apple, we absolutely use that. You can't stop learning in this business. If you stop learning, then you're really not doing. I don't believe anyone's actually trading if they don't keep learning. It's not possible, because the market, again, it's cycles, and it's constantly evolving. So you need to stay on top of it, stay in it, stay with it, and do that sort of thing. All right, real quick, one last thing you can do in sort of your tactics, and at least ground yourself in where you are or what you're doing, is this. Very old, who, what, where, why, when, and how kind of a thing. So real quickly, okay, what are you trading? What are you going to trade today? What are you trading generally? Trading stocks or futures or both, or whatever. Make sure if there's a good way to get your plan together, get your brain together. So what am I trading? Okay, what am I going to trade tomorrow? And then where also has to do what market, also has to do where are you in relationship to start time, right? 6:30 in the morning here, when the market opens, where I'm in Los Angeles. So there's a piece of that I want to know, where, in terms of how many hops to the market to put in really fast orders like these scalper trades. Where are you in your house? I showed you my office 10 years ago, which is similar today, but just better tech. Or that was cutting edge tech then, it's new tech now. One of the things I'm doing in this course is a whole thing on your trading environment, and you really, there's a lot of interesting things to know about that. But do you have enough privacy? Do you have enough, is there enough desk space? Are you doing it? We've had people trade from he worked for the gas company, he was trading in his truck. Where are you? When, what time of day, that sort of thing. Who is it? You in a group? Is it you in a group? And or maybe a trading room, like we have our mastermind guys, we love it. Why is this extra income? Is this is it wealth building? Is it what's your reason to do that? And how? Again, computers, software, all that stuff too. Okay, the last thing, and I know I'm coming up, I'm gonna cut this, leave this as the teaser, is the discipline in the brain, because like I said, I'm making a course and I love it, and I could go on and on and on. But let's just say that if you're going to have top trading psychology, or top performance rather, with your trading psychology, then these are the things that they have found again and again, study after study, read through all this literature, and it really distills down to probably much different than what most people think. Most people probably think you need to be hard-headed and daring and I don't know, courageous, or I don't know. But what actually happens is you need to be flexible in your thinking and have a growth mindset, which is I can learn, I can do this. It's going to take some effort, but this is possible, right? And then flexible in how you think about what happened that day. Because again, I said about the around the horns, that's your baseball hat. I forgot to tell you that the NASDAQ is more like, I was talking with one of our traders the other day, that one's really much more like a boxing helmet, or a training helmet, or a hockey helmet. And he was saying, yeah, I think it was Mike Tyson that said, everyone has a plan until you take a punch. And depending on what you're trading, you have to have the right hat on, right? You have to be able to take a hit if that's the style you're trading, and then keep going with your plan, right? Second thing, you have to have a plan to follow. I've beaten that into you. Be self-aware and focused. Focus. Very important. Self-aware also just meaning self-monitoring. What am I doing? What am I thinking? Am I not entering this trade because I got, like, there were 2 entries on some of those I showed you, right? Sometimes there's a second, sometimes it's gone to the stop loss the first time, and now you have a second entry and you're thinking, oh, I don't want to get smashed again. But is it more damaging when that one goes to the profit target? It is. For me, it is. I don't know. That's something to consider. Anyway, plan to follow, self-aware and focused, self-motivated and passionate about trading, and positive with self-compassion. So I know that this is sort of a lot, and I have in the course I'm going to come up, we're going to align the body, brain, and mind, because your mind is actually doesn't sit anywhere. It's not exactly your brain, right? It's your consciousness. It's everything you think. everything you are conscious of, and it's also everything you feel is what they consider the mind, and that goes between your body, your brain, and the environment outside you, and getting all these things aligned so you can have maximum performance in your trading. And I'm going to leave you with this checklist um, for things that you're going to need in your strategy, in your tactics, with your mind. We didn't get to go over that very much today, or with your physical. We didn't get to go over that very much today either. But I really wanted to get in and show you the mechanics of a trading plan. So hopefully that was interesting to you. If you guys, again, if you're interested in all that, then I really think you'll be interested and go ahead and text trial to that number or email me, Julie at TraderInsight.com. And it's been a pleasure talking with you guys today.